Way back in the 18th century, long before any computers or fancy algorithms, one man figured out the secret language of the market. His name was Munehisa Honma, and the system he created, it was so powerful that traders are still using it to dominate markets today, from stocks all the way to crypto.
This one idea, man, it just sums up his whole philosophy. He wasn't following the herd, he was studying the herd. He knew that the market's mood was the ultimate signal. And back then, that was a totally radical idea, and it's what would make him a legend.
And legendary? Oh, you have no idea. It's said that at the very peak of his career, Honma pulled off 100 profitable trades in a row. It's an almost unbelievable feat. So how on earth did he do it? Well, the answer literally changed trading forever. So let's back up. Who was this guy? Munehisa Honma wasn't born a noble or anything like that. He was a rice merchant in 18th century Japan, and he was trading in the world's very first futures market, the Dojima Rice Exchange. It was a brutal, volatile place where, let's be honest, most traders got wiped out, but Honma saw something they all missed. I mean, his journey was just incredible. Born into the family business, he didn't just learn the rice market, he mastered it. By 1755, he'd already written down his methods in one of the first books ever on market psychology, and his success was so absolute that he was given the title of samurai, which for a merchant was a practically unheard of honor. Okay, so what was the big secret? What was his edge? While everyone else was running around desperately trying to get inside info about rice supply, Honma had this huge revolution. He realized the market wasn't some spreadsheet, it was a crowd, a big, emotional crowd. Honma's breakthrough was this massive shift in perspective. He got that markets are made of people. And people, well, we're driven by these really powerful, predictable emotions, fear and greed. So he decided, I'm not going to trade the rice, I'm going to trade the psychology of the traders themselves. He saw these emotions moving in these huge waves. He called the bullish phase, the one driven by greed, yang, and the bearish phase, the one driven by fear, he called yin. He knew the real money, the big money, wasn't made by just riding the wave. It was about spotting that exact moment, that tipping point, where fear was about to flip into greed or vice versa. But, having this great idea is one thing. How do you actually use it? To track these emotional cycles, Honma needed a way to see them. So he invented something, and I guarantee you use it every single day, the candlestick chart. Think of it this way. A simple line chart just tells you the price. A candlestick tells you the story. Each candle is like a little snapshot of the battle between buyers and sellers over a set period of time. It shows you who was winning, who was losing, and just how intense that fight really was. And the logic behind it is so simple, but it's brilliant. A white body, or green as we see it today, means the buyers won that round. The price closed higher than it opened. A black body, or a red one, means the sellers took control and pushed the price down. It's like a scoreboard for market sentiment. Okay, so each candle gives us 4 key pieces of info: the open, high, low, and close. And those little lines sticking out the top and bottom, the wicks or shadows, those are super important. They show us where the price tried to go but got rejected. They're clues, right? They hint that the momentum might be about to change. But here's where it gets really cool. Honma didn't just stare at one candle at a time. He moved from the tool to the strategy. He started seeing the same stories, the same patterns, play out over and over again, predicting these huge shifts in emotion, and he organized them into what we now know as the 5 Sakata Patterns. These 5 patterns were the absolute core of his trading system, and what's wild is that if you trade today, you probably already know them, even if you call them something different. They are timeless blueprints of how markets think. All right, first up, we've got the 3 mountains, or Sen-san. To Honma, this pattern looked like the market was just screaming from exhaustion after a long run-up, like a final gasp before it reverses. Today, we call that the classic head and shoulders pattern. It's one of the most trusted reversal signals out there. Next is the 3 rivers, or Sunsen. This is what it looks like when the market just slams on the brakes. You get this little cluster of candles at the top or bottom of a trend, and it signals that momentum is dying. You'd know these as the morning star and shooting star, both powerful signs that things are about to flip. Then there's the 3 gaps, or Sonku. This is what happens when you see 3 price gaps in a row, all in the same direction. Honma saw this as the market running on pure emotional fumes.
just total euphoria or complete panic. We now call these exhaustion gaps, and they're a massive red flag that the trend is about to hit a wall, hard.
Now, the three parallel lines known as sanpai, this one's a little different. It's not about a reversal, it's about confirmation. It's three strong candles just marching in the same direction. This was Honma's sign that a trend was healthy and had strong legs. Today, we know it as the three white soldiers or three black crows, a real power move. And finally, we have the three methods or sanpo. Think of this like a sprinter catching their breath before the next dash. You see a strong trend, then a brief pause or a little consolidation before it takes off again. And this pattern? It's pretty much identical today. We call it the rising or falling three methods.
Okay, let's just pause for a second and think about this. We're talking about patterns identified nearly 300 years ago that are still playing out every single day on our charts. Honma's wisdom is completely timeless. Why? Because human nature, fear, greed, that stuff doesn't change. So after all that, what was the true source of his legendary success? Was it just memorizing 5 patterns? Nah, it was something way, way deeper than that. Here it is. This was his ultimate edge. Understanding human emotion is more powerful than any complex indicator you can find. While everyone else was looking for shortcuts and magic formulas, he just focused on the fundamentals of market psychology. He proved that sometimes the real shortcut is just mastering the basics. What Honma did was genius. He took this messy, chaotic thing called human emotion, and he turned it into a clear, visual strategy. He built a system that lets us actually see fear and greed on a chart, and then act on it with discipline. And that is why his legacy is alive and well in every single market around the world. And that really leaves us with a question, doesn't it? In a world that's just flooded with complex indicators, bots, and get-rich-quick strategies, Honma's story kind of forces us to look in the mirror and ask, are we just chasing the shortcuts? Or are we, like the samurai trader, building our edge on the timeless fundamentals of the market?